when countries are in economic trouble. You always hear two names pop up, the World Bank and the International Monetary Fund, or IMF. But what's the real difference between them? It can be pretty confusing, but stick around, because we're about to break it down in a simple, easy-to-understand way. So, why were these two powerful institutions created in the first place? Let's rewind to the end of World War II. The world was a mess, economies were shattered, and many countries were in ruins. To prevent another global economic meltdown and to help rebuild, leaders from around the world gathered in 1944 at the Bretton Woods Conference. Their big idea was to create a new system for international economic cooperation. And out of this meeting, the World Bank and the IMF were born. Their shared mission was to foster global economic stability and support reconstruction efforts, ensuring the world wouldn't fall into such a deep crisis again. First up, let's talk about the World Bank. Think of it as the world's long-term project manager team. Its main job is to fight poverty and help developing countries grow over the long haul. How does it do this? By providing low-interest loans, grants, and technical assistance for specific projects. We're talking about building schools, funding healthcare programs, improving sanitation systems, or constructing essential infrastructure like roads and bridges. The World Bank's ultimate goal is to raise living standards and create a world free of poverty. It's all about sustainable long-term development. Now, let's switch gears to the IMF, the International Monetary Fund. If the World Bank is the project manager, think of the IMF as the world's financial emergency responder. Its primary focus is on maintaining the stability of the international monetary system. So, when a country faces a short-term economic crisis, like its currency is collapsing, or it can't pay its international debts, the IMF steps in. It provides short-term loans and policy advice to help the country get back on its feet. The IMF's goal is to stabilize currencies, manage exchange rates, and keep the global financial markets running smoothly. So, what's the key difference? It really comes down to their timelines and missions. The World Bank is all about long-term development projects to reduce poverty. It helps build a country's future. The IMF, on the other hand, is a crisis manager. It deals with short-term financial emergencies to ensure global economic stability. One builds, the other stabilizes. While they often work together and are based in the same city, Washington, D.C., they have very distinct and separate roles in the global economy. It's like having a doctor for long-term health and a paramedic for emergencies. Of course, it's not all smooth sailing. Both the World Bank and the IMF have faced their share of criticism over the years. Some critics argue that the conditions attached to their loans, often called structural adjustments, can be too strict and sometimes hurt the very people they're supposed to help. For example, they might require governments to cut spending on public services. Others believe the institutions are dominated by wealthy nations and need major reforms to better represent and serve the needs of developing countries. Despite these challenges and ongoing debates, they remain incredibly influential players in the global financial system. To sum it all up, the World Bank and the IMF are two pillars of the global economy, each with a unique and vital role. The World Bank focuses on long-term development and poverty reduction, while the IMF acts as a stabilizer during short-term financial crises. Understanding this difference is key to making sense of global finance and the big decisions that shape our world. They continue to influence economic policies and the lives of millions of people across the globe. If you found this explanation helpful and want to learn more about how the world works, make sure to hit that like button and subscribe to our channel for more videos just like this. Thanks for watching.